What's up, swing trader? Snacks here. We're going to jump in and do our watch list for September 10th, 2025. So we'll take a quick look here at the indices, jump in and look at the SPY here. We're, back on trend, it may suggest. We had a good strong close yesterday. Something I did enjoy seeing when I woke up this morning. Typically I miss the afternoons. I am in Thailand currently. Anyways, we got a good strong close. We're seeing what we would like out of the suggestion that maybe we do get a continuation last Tuesday. Okay, so you got to say now we've turned it into a bear trap, right? And we're back on trend, pushing higher. And I think clearing out Friday's high, or really the gap up price, clearing that would, I don't know why you'd be short beyond that point. So I think we may get a push higher, guys. That's what I'm seeing. We've got the Fed policy rate decision update on September 17th. I think we may get a bit of a push into that. I won't be holding heavy at all going into it. You just don't know the reaction. I don't care if we know what they're going to do. We don't know the reaction of the market to that immediate release. I think it may be setting up, especially if we do push into it. I expect to see a bit of a sell the news event, so anyways, we'll let all that shake out. We'll see where we settle, right? And see if we can find some support, get a reaction, okay, get a show of strength, and then possibly a push back onto trend. And I think we're gonna finish the year strong, guys. I think Q4 is going to be strong for equities and very strong for us, okay? We've been a little bit choppy the last couple weeks, right, in the markets. I think it's just some heightened volatility knowing such a big decision is coming. I think they're exploiting that just a bit. A lot of overreactions and misleading reactions to some of the eco calendar events, right? So things are just a bit shaky, a bit choppy right now as we consolidate and go sideways. Wait to see the reaction, wait to see the announcement and then reaction of the Fed. But guys, my point here is look, we're strong, right, for breadth. Like, we're still good, we're still pushing higher. Okay, the Qs and SPYs, the Qs looks like it wants to break out. RSP is holding up right at prior all-time highs, so I would like to see it clear this range to the upside. That would be a very good look in the equally weighted, suggesting positioning confidence outside of the Mag 7, and IWM is still holding the 9, riding it up, and I think we may get a push towards high on IWM, which I expect to do very well in a rate cut cycle, guys. So the next 6 to 18 months, I think that small caps should do well, okay? It's what we've seen historically. So we'll go ahead and jump into the list. Not too long of one today. Most of our focus list has already triggered on RRR in the last week or two, or yesterday a few of them did trigger. I did jump into ACLA. We'll look at that really fast. So guys, what I trade is the leaders in a trend backed by growing fundamentals, and we wait for them to go on sale, see buyers step in, a show of strength, right, and push us back onto trend, and that is the trade. We look for a 2-to-1, and this hits at over 70%. I would say in the last couple of weeks we're more towards 50 for sure, maybe slightly above 50%. But guys, over the last 6 months, this has been absolutely firing off. In trending markets, the RRR setup prints, okay? So, let's get through September, maybe get through this rate cut decision, get back on trend towards the end of the year, and this is going to be a money printer, and it's doing just fine now because we get at least 2R out of these setups. I would suggest maybe just because of the shakiness in the markets, guys, scale back just a little bit, okay, until we get that confirmation of a trend higher, which I think could be coming, all right? We may get that confirmation today. We've got a couple more eco events, I believe today and tomorrow, right, which they could use to ramp up that volatility again. But guys, at the end of the day, every dip is still getting bought. We're still making new highs, right? We are in a strong trend and we want to be playing continuation patterns. All right, 5 out of the 6 models I trade are continuation patterns. RRR is my most frequent trader. So ACLA is what we entered yesterday, right? So we got a reaction at around our level, remount of the short term. We're in that for a 2-to-1, and I think we'll get it. So for the list, I still do like the look of Celsius here, right? We're getting our first real pullback. Okay, so we're looking for a show of strength. I've been sort of tinkering with putting in this 40 EMA, which would be an 8-week EMA, as another level to be watching for reactions off of, and I've seen it be somewhat significant. It's still pretty new to me, so it's not something that I'm trading off of yet, but I am seeing some significance to it, meaning I'm seeing frequent reactions around the level. Okay, so I'm playing with using it as one of my levels. You could replace it with like a 21 EMA, which I do use from time to time. But guys, usually I use the 9, the 50, the 200. That's more than enough. And we want to see a reaction at or around our level, and a remount of the short term would be a trigger for RRR. And yeah, we're going to see what happens here in Celsius. I think it's worth keeping on the radar. We've got ZS, which has been a slippery one here for a while, but we might be getting a change in character here. Okay. A remount of is starting to get too many lines. That's the other reason why I don't even want this up as we go through this. Guys, I keep my charts simple, okay? You should be able to learn to read price action, right? That's why we trade the leaders in a trend backed by growing fundamentals, okay? And we look for them to go on sale, a retracement. Well, let's show a better stock, but we look for a retracement, okay? A reaction at or around our level, and then a remount of the short term. And guys, these three indicators is all you need, you know, along with volume. What we're doing is we're aligning with the institutions as they position, okay? And they are positioning into the leaders. So when these things go on sale and you can see them step in, defend a level and push it higher back onto trend, that's the move we want to be catching. And you don't need a bunch of indicators for that. You need your eyeballs and you need to understand basic market structure. What is a trend? Higher highs, higher lows. So we let it pull back, okay, hold a higher low and then push back up towards higher highs. That's our trade. Our stop goes right below the new lower low and we're pushing at or around that recent higher high area right there, right? Like it's very simple stuff. We don't need a million indicators. I find that stuff to be very distracting. It was a big part of me spinning my tires for a long time in the markets, right? Simplify things, learn price action, okay, learn market structure, and put these institutions at your backs, the people that really move the markets. That is what the Triple R setup does. All right, so Bros is another one here that we're getting reaction at or under level. This is more of a shake and go scenario for me, right? You could consider it a Triple R setup now as well if we get back over the short term. But what I'm looking at here is this broke out of our structure, okay, and then it rolled over hard. So we might see a shake and go. So it shook everyone that bought this out, held, you know, most of them, a lot of the people, it shook them out. We're holding a very significant level, remounting the 50 back over the 9, and a break back through that structure would be a qualifier for a shake and go setup. It would also qualify for a Triple R at that point. So I do like Bros if it can get some legs here, okay, and then stop his recent lows, and I would target new recent highs for sure on this one. This guy can move when it does. So I like VST a lot. I've been watching this for a while. Remount of the 50, I think, is a trigger here. You've got prior highs just above and recent all-time highs just above that. I think we could go for a slightly bigger trade here of a 3-to-1 in my opinion. I wouldn't give it any more than the 9 if it does trigger, right? We don't want this thing rolling back down. In a sense, it would just be a fake out, right? So if we can get over this, hold it and push, get through prior all-time highs, I think we make new highs on this. I would keep the stop pretty tight on this. I don't see any reason to let it go back and wipe this recent swing low. If it does that, then it's just a failed breakout, guys. And you know, get the fuck out. It's okay, it's okay. But you know, more often than not, these things work out, guys. So VST is attractive to me. COF is an interesting one. So I did just recently trade it and got a 2-to-1 out of it just a couple weeks ago. I moved my stop up, it's why that looks so low. I think my stop was just below the 50. But anyways, this was the recent trade, right? So we have a trending company, respecting structure, right? Making higher highs, higher lows, right? In a strong sector. We get a retracement, reaction at or around our level, and a remount of the short term was my trigger and got me in then, right? So we're sort of getting it again. It also gave it just a few days later, and again, it worked, and it's giving it again. So guys, this is triggering again, and this is one that shows, like, here's one that worked out because your stop would have been below this recent low. Definitely would have got 2-to-1 out of this. Then it worked just again. I mean, guys, this is how the leaders work, okay? They defend levels. When they go on sales, the institutions are positioning into the leaders and they defend the levels and push them back onto trend. This happens over and over and over again. It simplifies everything in the market for you, okay? It's trading within market structure, okay? These are the leaders, and when they go on sale, do they step in and defend the levels? If they do, it's very likely that they will retest or make new highs, that they will resume the trend, the uptrend that they are clearly in. Higher lows, higher highs, okay? So this is trading market structure. If you're spinning your tires, okay, with complex strategies, do consider this, okay? Step back, stop trying to day trade, okay? Give yourself some time to think and read structure, okay? Zoom out, trade the daily, and work with the trend, trade continuation patterns. We are in a raging freaking bull market, okay? There is money on the table, guys, if you just simplify things. I mean, I didn't mean for this to happen, but it's so clear how effective this Triple R setup is, okay? It's completely changed my life. right, and guys, I'm in the middle of my pilot boot camp. I might as well plug this now. We just started the pilot where I am leaning over your shoulder for 60 days and teaching you all 6 of my models and also proper risk management. I help you build a risk profile, stick to it so that you're not just making money with the models, okay, but you're keeping it and compounding it over time. I still got it at the pilot price of just $250 as we're in the middle of the pilot, but as we near the end of this pilot in October, I'm gonna double the price, and I'm gonna keep doubling the price until we reach 5,000, because you get me private one-on-one videos on top of the curriculum, the structure. Check out the landing page and it explains everything in there. Look at the structure, look at the curriculum, right? But there's a curriculum, there's assignments, there's homework, there's things, but you get me, you know, working through all of these assignments with you individually on top of the group lessons and the live market sessions of me trading that we get to later in the back half of the boot camp. But guys, you got the group sessions and then me one-on-one for at least 60 days. If you apply yourself, I'll roll with you for the long haul. But look, you got me for at least 60 days. Okay, I'm a top 0.1% trader. I feel strange. I'm not very bragocious ever, right? This whole video thing is weird to me, but I know what I'm doing. I can read the room, I can execute, and I have been for a very long time. Okay, I can help you. The market is a brutal teacher. So guys, I don't want to spend on that. Okay, the offer is there. Please join if you're interested, if you need help getting some traction in these markets. Let's get back to the watch list. HWM, we've been looking at over the 50, breaking through this structure. I find attractive. I think it's worth a swing. Dave is one that is known to squeeze, and we're breaking back over that 50, which we said we were looking for. So Dave is attractive to me here for a test of recent highs. All right, I like it. And then we've got HEMS here we've been talking about throughout the week. I like this pullback, okay? We were talking about the reaction off the 200 back over the 50 was attractive for a test of all-time highs. I like that we pulled back at that level, right? So now give it a day or two, or you know, possibly today or tomorrow, getting back through the 50 and then clearing, that would be Monday's high. I think is a good look. And now you've tightened up your stop would be the other thing. When we were looking at this earlier in the week, I think, you know, I was saying if you saw those videos, you had to have a loose stop. Okay, well now I think we can certainly say it's the 9, especially if we react off of that level and remount the 50. I think that your stop should be just below the 9, and then you know you don't even have to target all-time highs or recent highs for a 2-to-1. You know, just up towards that zone, which you guys all know how squeezy HEMS can get. It can move very fast. So I'm starting to like this a bit more than before. I didn't love it with a loose stop, but it looks slightly more attractive to me now. And then we've got pay, which I've been talking about here for a few days now. I'm looking for a trigger on this guy. I want to anticipate an IPO cycle, which these moves repeat. Go look at any of the leaders and see how often they IPO, put in a cycle, and then this range historically, more often than not on the leaders, repeats. Okay, so you have your price range and time range. You will usually see these things repeat. So you know that's suggesting around 80% upside on this thing in the next 2.5 years. So you know, play that as you may. But within that also too, like you don't have to think so. I trade 3 days to 3 months. The point is that within that, there will be a ton if we get that breakout right and it holds the breakout of the IPO cycle. I like to see it break out, come back, retest, hold, and then go into trend. Within that, I mean, we're going to have dozens and dozens of continuation plays, okay? Whether it be the triple R, the gap down reversal, the shake and go pattern, like all of my models, 5 out of 6 of my models are continuation plays, okay? We identify, is the market in a trend? Currently, yes, absolutely. All right, are we a bullish or bearish? I don't care if we're in a trend to the downside, as long as we can confirm we're in a bear market. I do everything the exact same, but invert it, okay? It's all the exact same, so this isn't going anywhere, guys. I feel a little bit spirally today. Sorry, I've had a bit of a goofy morning. We'll try to clean this up here at the end. I am liking the look of semiconductors here, okay, as we test the top of this range. I'd like to see it get out of the range, okay, and that would suggest that semiconductors are going to participate in this potential rally coming in the broader markets, right? We would love to see semiconductors be a part of that. AMSC is one of the ones I am looking at here, okay? I think, you know, back over the 9 if you want to be safe over Monday's high with the stop just below the swing low. 50 is your stop level here for sure on this, and then you can just slap in your 2-to-1, okay? You're probably going to be looking more towards, would that be all-time highs? I believe so, yeah. But guys, you can see, no, it would not. Okay, so recent highs, okay, ton of accumulation on this thing. I like it, okay? It is currently a leader, a ton of RS. I believe it's in the upper 90s, 98 UD ratio, almost 1.5 times buy side volume. This is attractive, this is a leader, this is pulling back and retesting our level, okay? And we're getting a reaction, okay? So if we can get a confirmed remount of the 9, this is a trigger, and I don't see any reason not to aim for new recent highs, plenty of time before earnings, which we never hold into, okay? And then OUST is pretty much the exact same look, okay? Same sector, same look, guys. I'm not gonna be repetitive there. And then AMD would be the exact same thing. So we've got a strong company and a trend. We look for a retracement. Reaction at around our level, back over the 50, more specifically here on AMD, would be attractive to me and I think worth a swing. Okay, so that's it for today. Guys, you know, you got to continue reading the room, right? That goes day to day, but right now we are strong, we're pushing higher. Let's see if we can get some strength and continuation out of the market. Again, there's a couple eco events to keep an eye on. Not even to keep an eye on, but expect volatility around that this week. All right, guys, so that's a watch list. Let's go make some money. Stay safe, manage your risk.